Welcome to another episode of the Weekly Crypto Check-In, recorded on September 24th, 2025. I'm your host, Robert Swarthout, and joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, good, Robert. I'm down here on fall break in the 30A here in Florida, so glad to be remote, but also to check in on what's happening in crypto. How are you?
Good, doing good. I imagine there's not much crypto on the beach down there, so maybe this is you're having a good vacation. So
yeah, a few conversations, about what's happening in the financial markets, and crypto, I think for some people is interesting. So it's been a couple of weeks since we recorded, so hopefully you've been good and holding things down in Atlanta.
Yeah, I'm trying to, and certainly the news is starting to pick up. We were doing these weekly for a while, then the summer kind of got slow, and it is certainly getting back to probably a weekly pace going forward. So anyways, we'll jump in here. So our first topic is about the new SEC rules on crypto ETFs. We've talked a little bit about this in the past, but they basically approved it last Monday, so a week ago. And I also thought that possibly it was going to take some time. I don't know why I thought that afterwards, but literally the next day some ETFs started trading, and it was at first it was a head scratcher. I couldn't figure out if the news was fake or not, but it was real. So there was a Doge ETF launch, and there was an XRP ETF launch. There's a lot of them still waiting to come. There's, I think, over 100 crypto ETFs. And also, I think it was on Wednesday last week, the Grayscale Trust that had the top 5 biggest cryptos that are not stable coins as an quote unquote index, that got approved to convert from being a trust to a true ETF. So you actually have a real trading crypto index out there now.
Yeah, that was a rapid fire last week around a lot of these launches. And I guess, we talked about this last time. One of the things I wanted to try to do is sort of put a retail angle on it, or what's the impact on retail, and particularly, private wealth, so that more folks that are listening who may be advisors or thinking about going to their advisor for questions or maybe interest in digital assets and crypto. I think the takeaway here is that, this just continues to solidify, I guess, the shift around, capital and easing the ability for really the market to dictate if there's interest in the products. And reducing, obviously, in some cases, unnecessary delays and administrative red tape, and really just opening up, like you said, the number of issues still to come. It's just broadening the exposure to the space. So yeah, pretty dramatic move. Yes, last week. And I think there's just going to be a lot more coverage of the overall space now that you have, this many more spot ETFs, on Solana and XRP and Doge and others to come.
Yeah, exactly. It's between now and the end of the year, we probably could literally talk about an ETF launch every episode, and probably would cover them all. So it'll be interesting to see how we choose to do that. But it's what I'm most excited about. Yes, the individual spot ones are coming, but for the financial advisors out there that want to have exposure for their clients, these index ones are fascinating. I know Bitwise has one coming, an application that is the top 10 index, which I think is a little bit more realistic than just a top 5 crypto, because that could be obviously very heavily weighted.
Right.
So we'll see how that goes. But
yeah, we have seen a lot of spot not spot, but with single stock ETFs, and there's a lot more customization in general in the ETF space and thematic exposure. So I agree. I think crypto's in a different space though than US equities. I think that many advisors are looking for regulated products. They're looking for more regulation and compliance, and they're looking for the ability to get liquidity. And so if you see these indexes come where they can get broader exposure than single crypto exposure, it's just less complication, less research that the individual advisor has to do.
Right. Now that we have more than just Bitcoin and Ethereum, it's going to be interesting to see how these ETFs kind of play against each other and see what the market thinks. But I should have said up front, what was approved was you have to have 6 months of coverage on Coinbase futures for that particular token asset to have the ability to do the accelerated process to get approved for trading. So there's nothing in it about staking currently. So I think there's some, potentially some revisions to this over time. But I think this starts helping relieve some of the pressure on the SEC to kind of onesie twosie approve these things, which was never going to seem super exciting. So anyways, moving on to our second topic, talking about Tether. So the issuer or maintainer of the largest stablecoin out there, USDT, they did a couple things this last week. They announced that they're launching a US-specific version of USDT called USAT that basically is the Genius Act compliant. Great. I think it raises more questions than answers personally, because like, what does it say about USDT? But also that they're going to be focused on the market, and just generally like they seem to be, I guess, catching some tailwinds, they think, because they're also raising some money out there to, I guess, from a VC perspective. So
yeah, at a pretty sizable valuation. I mean, what's out there is 500 billion. That's with the B.
Yes.
And you see this as a move to take on Tether, or Tether to challenge Circle with USDC.
Yeah.
So,
I think it's that, and it's 500 billion would, I believe, make them the most highly valued private company in the world, as far as I could tell, or VC-backed private company. So I don't know. 500 billion seems rather rich to me. Again, we don't have all the details behind the scenes, but they don't own the stablecoin. They own the rights to the interest in the stablecoin. But that's a big delta in those numbers. So maybe we'll see. And I look forward. You would think that whoever puts in $20 billion would want an audit. If they ever publish that audit, I think there's a lot of people that would be really curious, because Tether has been really curious about being not doing an audit all these years. So
I guess, the key is they're seeking a $500 billion valuation. That doesn't mean that they'll necessarily get it in the private placement round. So more to come. But definitely was a big headline.
Yeah, awesome. So our third topic, to me, was cool to see, not because it was fundamentally changing anything, but this was the first time that you could sell, so 24/7, 365. You could sell BlackRock's ETF Bildl, so that the one that has the tokenized treasuries, and the Van Eck version of it. And you could sell those 24/7 into RLUSD, so Ripple stablecoin that is on Ethereum. And soon you'd be able to do the same thing for the RLUSD that's on the XRP ledger. We're about to be in that world where crypto is 24/7. We've been there forever. The traditional markets are about to be in a tokenized world that's 24/7. That in some ways changes the news cycle a little bit. So,
I mean, it gives investors the ability to get obviously frequent or immediate yield access. Obviously, reduces settlement times and provides this, like, I guess you could say, bridge from traditional to blockchain based strategies with respect to the 24/7, like 365 conversion between the fund shares and the on-chain stable coins. So I think, takeaway for investors and advisors is that, the discussion around real world assets, RWA, and in particular, fund shares, we're starting with more institutional funds like BlackRock's, but eventually the potential is that you could see private funds, private placements, and other illiquid assets be tokenized and move on to the blockchain via various platforms, where there would be, the ability to actually access the yield, get liquidity in very different terms and different, sort of different structural elements than exist today, where you have, typically like a 1-year lockup in private funds or longer. Some funds, the lockup can be, 10 to 12 years if we're talking like venture. And the minimum investments are typically for accredited investors and above, qualified purchaser funds, qualified institutional funds can be, minimums $50,000, $100,000 for an accredited investor, all the way up to minimums of $1 million or $5 or $10 million or larger. So this, this is the beginning of this, conversation around tokenized funds. I think we'll see much more of this, in the next year or two.
Yeah, and it's this, I guess, it just ties together. Like an episode ago, we talked about how the NASDAQ had filed with the SEC to be able to tokenize their ledger. I mean, this is no different. This just basically NASDAQ's doing it for functioning all the things that trade on their platform versus, just this one example. And it was cool to see not just Ripple tweeting about this and kind of be in the news, Securitize, which has helped running that platform for those. And I think even BlackRock got in on the news a little bit. So pretty cool to see. So we'll move on to our fourth topic here, which is the SEC's evolving the regulatory framework for crypto. So we have talked about this admittedly in the first topic a little bit, but it's cool to see them, trying to push things forward, right?
Yeah.
You have Paul Atkins literally this last week saying crypto's time has come. Most crypto tokens are not securities. I don't know if we could be more than 180 degrees from where we were a year ago, but we are.
Yeah, I mean, I think this whole regulatory signaling with this public statements is giving issuers and is giving market participants just a tremendous amount of confidence to move forward with initiatives, projects, partnerships, and certainly I think we're going to continue to see, the market reacting to this, this signaling and this regulatory regime by saying, this is a growth space for us, in addition to alternatives and private markets. As I've talked about, I think crypto joins that, and I don't think it stops, with just things like ETFs and real world assets for advisors. I think, you'll start to see a push for pension funds and 401ks and retirement plans, that really can have a potential impact on individual investors and advisors. I think you'll start to see a lot more diversification and menus of offerings that include digital assets. I don't know that it happens in 2025 or 2026, but I think, to the extent that the regulatory regime and posture is what it is today for the foreseeable future, I think it's not too distant future where, the retirement space starts to really think about embracing some of these digital asset strategies. They might typically be from the biggest issuers to start, but I think that day's not too far off.
Yeah, I agree. Yesterday I was on Casey Smith's podcast that he does, Wiser Investor, and we talked literally the whole show about 401ks and crypto and 401ks. And what I found fascinating, because I didn't quite understand all the nuances, and I guess I have a better appreciation now, is just because the SEC allows it, and just use Fidelity's example, say they allow crypto ETFs in 401ks, doesn't mean that if you go to your employer that uses Fidelity for ETFs, that would even show up as an option, because you have the trustees making the decision on what is or is not available. And then they also could put restrictions around it. They could say, oh, you cannot allocate more than a certain percentage to this. So it's good news generally, but there's a lot of nuance to it that makes it not quite as exciting potentially in the short term. So, but long term, I think it's all there.
Yeah, one thing that we're doing at our firm, at Gramercy with the retirement plans having a lot of those restrictions is some of the bigger plans have something called self-directed brokerage, and I think this window
brokerage link,
allows individuals that work at companies where maybe they don't have as much access to the broader diversified menu, have the ability to use that brokerage link and that open window to go and identify an advisor and to actually get more active management and more diversification around their retirement assets, and not be limited and restricted to just what's on the menu, because very likely at the biggest plans, you'll continue to see, a limited amount of alternatives and limited amount of crypto for the foreseeable future until, there's much, much bigger, broader scale adoption. So I think it will come. I just don't know, how quickly. And I do think advisors, as we've said, will continue to, need to lead the charge, because I think individual investors who are relying upon their advisors are going to follow their lead. And if advisors are not making, recommendations, then it's very likely that individuals that have those respective advisors will probably continue to miss out.
Absolutely. And, obviously this is bleeding into our next topic with crypto and 401ks, but one thing I mentioned in that podcast with Casey was, if you think about crypto is, in my opinion, a long-term investment. You can trade it day to day, but I think you're looking at a generational wave here of change to finance that marries up with the type of thinking you should be thinking about in a 401k, that it's a long-term vehicle, right? So I think they do match in that way. But the trick is like, how do you take gains in a 401k if something grows outsized? Like if you put in, you say you did a 5% allocation, which would probably be a high percentage in a 401k, and crypto does what we think it might do over the next 5 years, 10 years, you have a very lopsided 401k potentially. So like,
Right.
how do you recalibrate those percentages over time?
Yeah, there's an asset allocation and a reallocation exercise, right? When you see, because the space has had more volatility than say other traditional asset classes, and most of the retirement plans and pension funds to some extent have gotten more diversification, particularly some of the larger public plans in states like Texas and California, Illinois and Florida. But in Georgia, there's not as much in the way of alternatives in the public pension plans, for teachers and public employees. But I think crypto is going to have a little bit of a mountain to climb just because of the historical volatility. But I do think we see a day where 401ks and pension plans do get an allocation, but it'll come down to having, trustees and the right allocation tools and mechanisms in place because of historically, just the volatility of the space.
Yeah. And, if I had to place a bet today, what's likely to show up in a 401k first is one of these index products for crypto rather than individual Bitcoin, Ethereum, XRP, whatever. So
yeah,
we'll see. Moving on. So our second to last topic here is about Fed rate cuts and their ripple effect on crypto. If you've looked at all the crypto cycles and you've studied them, one thing that you may notice is crypto has never had a blow off bull market top in a situation where the Fed was not easing. Well, as of last week with a rate cut, I think that we potentially are entering that easing cycle. This may be the last check box to full on crypto euphoria this fall or this winter. Obviously not financial advice, but it's interesting to kind of see this last thing happen around the time that we think crypto might start moving again. So
yeah, the move into what I guess I've always called more risk on appetite assets or risk assets, like those that offer more attractive yields, those that have the ability to benefit from the the rotation out of let's call it safer assets into assets where there's the potential for more growth, the potential for the upside, and I think all those things that benefit from more optimism. We've seen some rallies recently. I think one thing that remains a question will be just liquidity, right, over the next several months, particularly in the fourth quarter through year end. That's gonna be something I've been reading up on and sort of following to see how this potential rally and liquidity plays out and what that dynamic looks like.
Yeah, I was listening to some kind of podcast the other day about, I still don't realize there's still $7 trillion sitting in money market accounts.
That's right. Yeah. The Wall Street Journal had an article about that. Yeah.
It's about to start earning a little bit less and potentially even less as the Fed decides to cut even further. So obviously that's not all coming to crypto. I'm not trying to say that at all.
And or other assets. It's just going to stay in money markets.
Right. But I guess one of the questions that was raised is generally, is there just too much cash out there? Like we're looking at these things like, look at this pile over here, but it may never move. So we'll see over time. Cool. Well, our last topic, and we've kind of touched on this a little bit, but the year-end market structure changes in crypto really come around to the Senate passing in the House reconciling the market structure bill. One thing that may be putting a slight kink in that is the CFTC chair kind of got reset. It was going to be Brian Quintenez. That nomination got pulled, so they're back to recruiting for that again. And you have Commissioner Pham that is making progress, but only so much can be done with an interim chair. So hopefully this doesn't get held up. But there's some senators from the Financial Services Committee saying that the crypto market structure bill will pass by the end of the year. So again, we have 3-ish months, but there's a lot of holidays in there. So it's going to become very quick, and hopefully we get it done, because that'd be a big thing.
Yeah, I mean, that's exactly what I've been reading as well, that that there is optimism that we'll see a bill before the end of 2025. I think the takeaway for me around this, if we do see a bill, I think one of the things that comes out of that is, well, several things. I think it increases what we said earlier in the show around real world assets and tokenization. I think we see a lot more partnerships between the likes of the infrastructure providers of the world and the asset managers, where we're trying to bring real world assets on chain. And there's a lot more examples of those partnerships that come to pass with this market structure bill. I think you see a lot more developments in areas of custody. I do think some of the bigger retail brokerage platforms will come online in 26 with the passage of this bill. I think that they're just putting in place a lot of the infrastructure now, so that when they get regulatory certainty, they can then be ready to go to market to try to attract more of those retail assets. And just generally, I mean, and we've said this, there's a lot more institutional activity happening with all the crypto products that have been created, futures, exchange traded spot. There's a lot more going on in ETFs, obviously, as we said in our very first headline, just, with what happened last week. But I think this overall fundamental reshaping of the digital asset and traditional asset, and that bridge between the two, and the deepening of it seems to be consistent through a lot of the research and reading that I've been doing. And obviously that's a lot, but I think it comes down to, we've talked a lot about regulation in this industry, and particularly on the show over the last, 6 months, but we're not there yet. So hopefully by the end of this year, we see some clarity. That sometimes in crypto, it can be hurry up and wait. And hopefully we get there this year.
Yeah. And I think that when I first started talking about this, I probably should have been more clear. So the reason why the CFTC is likely, that chair position is so important, is a large majority of crypto is going to be likely to be viewed as a non-security. So it also ends up in the CFTC's lap to basically control and regulate. So having the right person there and making sure that everyone's in line is super important. So fingers crossed they get that done, that chair filled soon, and we can get some market structure by the end of the year. Have a great Christmas. So
yeah. Christmas come early, potentially.
Yeah, absolutely. Awesome. Well, thanks for joining us on this episode of the weekly crypto check-in. To stay updated on future episodes, you can find us in any podcast player by searching Tea Time Crypto Capital or the weekly crypto check-in. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.